Welcome, ladies and gentlemen. Commodity TV here for you today with Amir Adnani, the President and CEO of Uranium Energy Corporation. And we want to talk, of course, about the company. But first, we want to talk about the markets, the production cuts in uranium, and the rising uranium price. Amir, welcome and hello to Vancouver. I hope you are doing well.
Johan, I'm doing well. Thank you. And good to connect with you through Zoom video.
That's right. Then we do a little bit of advertising for the service like that. No, that's really a great thing, and glad to see you in very good shape and everything is fine, as we were discussing already. And not only gold is rising, uranium is rising. Finally, we were discussing this in January and in March at the PDAC. So what happened?
Well, if we just step back and remember that in the uranium market, from a supply-demand point of view, we've had the industry really go into deep supply cuts even prior to COVID-19. Mm-hmm. You remember McArthur River, at the time, the world's largest uranium mine, was shut down, and we've seen production cuts by Orano, by Kazatomprom, the large producers, and the market was really starting to rebalance. Mm-hmm. And when we entered 2020, as you know, there was also a lot of wait and see with regards to the US, and we'll talk about that later. But what has happened now is what you would really call a black swan event, because the entire situation right now that the world is caught up in with COVID-19 has caused supply disruptions when it comes to mining activity all over the world. And it's not just uranium. I think as of latest count, over 200 mines, the number might even be 250, have been impacted globally across all commodities with this. Whether it's forced shutdowns where the government is saying you got to shut down these mines as part of measures to keep employees safe, or just the companies deciding they need to do that on their own. And we have seen, of course, uranium is not immune to COVID-19. It's also been affected by it. And so the numbers are quite staggering, Johan. So just to walk your audience through this very carefully, okay? Mm-hmm. Annual production of uranium was expected to be 142 million pounds this year. Mm-hmm. But let's just divide that on a monthly basis, because these disruptions right now are happening on a month-to-month basis, okay? So we got to look at it, I think, on a month-to-month basis. So production of uranium this year would have been at just under 12 million pounds per month. Mm-hmm. Okay, now we saw Cameco announce that their Cigar Lake mine was going to be suspended at least for 4 weeks, and I think this can go for longer. But for the Cigar Lake production, that amounts to 18 million pounds per year. That's the biggest uranium mine in the world. And on a monthly basis, that's about 1.5 million pounds. Mm-hmm. Yet we've seen the Kazakhs, Kazatomprom, come out and announce that 10 million pounds of production will be lost on their end. That's over 3 months. So divided per month, that's about 3.5 million pounds on their end. You've got in Namibia, we don't have the exact numbers in Namibia. All we know is that the region where the Rossing and Husab mine are based out of are also undergoing safeguard measures by the authorities, the ministry requesting that. So somewhere between 5 to 6 million pounds per month of uranium is impacted right now and could be offline. Remember, total production is 12 million pounds per month.
So that's like half of the production is off.
Exactly. That's significant. You're talking about almost 50% of monthly global production of uranium is negatively impacted right now and most likely will come off. Now, this is also showing itself in the spot uranium price. The spot uranium price was at $24 per pound. It's up almost 20%. It's approaching $29 per pound. Mm-hmm. And even depending on where you're buying and settling uranium, at Cameco, the offer price is $30. So if you're going to buy uranium and store it at Cameco's facility, it's offered at $30 per pound right now. Wow. And that's, by the way, psychologically a very important number, $30, because we haven't been at $30 a pound uranium for a few years. So to see those types of numbers emerge in the market now, it starts to tell you that you have a uranium market that has now gone through 9 years of the bear market since Fukushima happened, has gone through 3 years of production cuts prior to COVID-19 even happening to really tighten the market. And we were getting into a really tight situation coming into 2020. And then now, all of a sudden, half of monthly global production is offline. It's a classic black swan event situation. It's exactly what happened in 2006 when you had the flooding of Cigar Lake. And that became a catalyst that really began to move the price. The price didn't go to $100 a pound overnight. It took 2 years until we got there, but it really took a supply disruption to get the market going in 06. And I think this time around, we have the same situation where you now finally have a supply disruption that was unforeseen and could potentially get the market going.
Yeah, and also, isn't it like that, as far as I know, Cameco still has contracting deliveries, right? I mean, so when they shut down, they have to buy this in the market in addition, don't they?
Yeah, that's a very good point, Johan. So add on top of that, the fact that when Cameco shut down its McArthur River mine, this is again the prior cut, not related to COVID-19. They, in essence, have supplies of uranium that they're planning to buy in the market to deliver into their long-term contracts. And that number, based on latest count of it, it should be around another 6 to 9 million pounds, maybe more, not as Cigar Lake is offline as well. But you're right. So you also have a very perverse situation where the guys who are supposed to be supplying the material are actually in the market buying it. I mean, it would be as though BMW and Mercedes were no longer making cars and they were just going to be buying cars and then selling them to customers.
Yeah.
And that's basically what's going on here. This was happening already in uranium. And I think now we're going to have potentially more of that.
So, but wouldn't that mean that, let's say, the buyers of the large utilities, shouldn't they be now not nervous? I mean, I'm interviewing you on this theme like for the last 3 years, and we always said, hey, man, this market is shrinking, the supply is shrinking, the demand is at least stable, yeah, and there's still no supplier, no buyer from the large utilities for the nuclear power plants that they want to secure longer-term supply. I mean, now it sounds to me like a perfect storm.
It does, except, Johan, I mean, I guess what would happen is, and just like in 2006 with the flooding of Cigar Lake, the utilities didn't all rush into the market at the exact same time, because every utility would be in a different position today in terms of how much inventory they have on hand. And you have over 400 nuclear reactors in the world. And so the strategies for each utility would be different. Having said that, if I was planning to buy uranium 2 months ago, and all the supply chain disruptions that we're seeing now hadn't happened yet, my mindset would have been different about how I'm going to buy uranium than it is today. And so clearly, today, you have to look at supply chain risk management very differently. This is really a big issue for every industry right now, is everyone's really thinking about supply chain. How are you going to get the raw material from point A to point B? And don't forget, in between, there could be disruptions as well with the conversion of uranium and enrichment and fabrication. So I think the job has become complicated. And arguably, now we should start to see perhaps more aggressive utility contracting and buying. These things, I think, take a little bit of time to start to reflect themselves. Already, we're seeing a move in the spot uranium price. Now we need to see if this translates to more utility purchasing, more contracting. But I think this is a new story. And don't forget, a lot of people think Cameco has only shut down Cigar Lake for 4 weeks. We're already 2 weeks into that. So in 2 weeks, if Cameco announces that this is extended for longer, okay, that changes the landscape again. So where we are in the market today has a lot of shifts and movements in it potentially in the coming weeks. And that could only potentially cause more price upward pressure and the utilities to start to perhaps become more aggressive. I say perhaps because when you've been in a 9-year bear market, complacency can set in. People might just feel it's going to be okay, or we don't need to move quickly. So behavior has to change and strategies have to change. And we're going to have to see how that plays out for the utilities and buyers of physical uranium.
Yeah, and also it looks to me like that we are getting, let's say, a new buyer into the market sooner than later, which is called the US government. First of all, Trump said like the $150 million buying per annum for the next 10 years. This is one step, I would say. But also it looks to me like when I look at the comments of Mike Pompeo, I think he's the energy secretary, if I'm correct, that he said, oh,
Secretary of State.
Secretary of State, sorry. Yeah, and I think he was also saying, wow, now it's really getting critical through Corona. This shows us that we have a problem in the supply chain. We have to make sure that the US has enough uranium on stock, but also ongoing supply. Do you think that maybe this could be like a new competition for the utilities?
Well, first of all, just right now, when we were talking about supply disruptions, I made the comparison to 2006 when we had the flooding of Cigar Lake. But for the benefit of everyone's, for background information, just to remind everyone, back in 2006, when that happened, the US government, in the form of the Department of Energy, was basically a seller of uranium. There were stockpiles of uranium that the Department of Energy was selling through a barter program to pay for the cleanup of a site in Portsmouth, Ohio. They were selling about 4 to 5 million pounds of uranium into the market. So it's interesting that today we're not talking about a supply disruption again. And it's not just Canada or Cigar Lake. It seems to be global because it's affected Kazakhstan as well, which, by the way, let's not forget, Kazakhstan is 40% of global uranium supply. It's a single nation OPEC. Okay, it's Saudi Arabia on steroids. So in terms of its relevance to the uranium market, right? So today, not only do we have the supply disruption, but to your point, we have a new buyer of uranium in the market, potentially. And I say potentially because the US government is no longer selling uranium. So that previous selling that used to exist for many, many years, where the Department of Energy would sell uranium from their strategic stockpiles, that ended. And now there is a line item that was unveiled in February in the latest budget, where it looks like Trump, on the back of recommendations made by the Nuclear Fuel Working Group that he created last summer, in order to look at national security of uranium and the fact that there's an over-dependence on foreign uranium, there's a budget in place or proposed to buy $150 million worth of uranium per year for 10 years. That's $1.5 billion over 10 years. That's your new buyer of uranium. You're absolutely right. And that buyer of uranium didn't exist before. The last time the US government was such a buyer of uranium, you would have to go back in the 1970s. But then you raise another interesting point, which is and I've talked about it with you, and we've done interviews about this, where we've said there was a national security issue about the fact that the US was importing all of its uranium requirements. And people agreed in the White House and the administration. But now, because of COVID-19, there's so much more sensitivity. There's so much more of concern about all supply chains, from pharmaceuticals to where you get your mask to where you get your food. And so now more than ever, and this is to your point about Secretary Pompeo, Secretary of State, who was commenting just 2 weeks ago about the fact that we got to look at all of our supply chains. We got to make sure that we can look after our basic needs. And uranium is one of those basic needs because it's a raw material. It's an energy commodity. And it's the raw material, the raw fuel that's powering 20% of US electricity. The fact that 100% of the uranium requirements is coming from overseas. And now, Johan, there's not even a single mine operating in North America. Forget the US. Now with Cigar Lake shut down, in North America, there's no operating uranium mine. You're telling me all this uranium that's needed has to come from Kazakhstan. And Kazakhstan itself now has a problem with COVID-19. And so you look at the supply chain here, this doesn't make sense.
Yeah.
And so I think now more than ever, there's a very compelling case for what we've been talking about for so long as an industry and as a company in the US. So there's your new buyer uranium, and the current environmental landscape post-COVID-19, and the one we're still in, I think gives everyone a new view of life when it comes to supply chain. You know, my wife, my kids at home are asking now these questions. Where does the food come from? Where all these things we took for granted.
Mm-hmm.
Now we're asking, where is it coming from? You know,
and is it coming?
And is it coming? That's an excellent point.
Absolutely. No, so that means to me, like, finally the things are really kicking in. We were discussing the last 2-3 years. That is looks at least to me like that, and for me it's only a question of short term that we see over $30 in the spot market for uranium. But as you are also the president and CEO of a uranium producer in the US, you have now under care and maintenance, but you can go back quite fast into the market. So how can you benefit from the situation, aside that your share price, thank God, moved up from the lows we saw? I think you are up like 20% within the last 3-4 days, but still way too cheap, your share price. That is also for sure for the value that you are offering. But how do you think you can benefit from the situation? Have you received already calls, maybe from the government itself, that they said, "Oh, Amir, can't you produce for us uranium? We pay you $45."
Well, first of all, this program for the U.S. to establish a national uranium reserve. Mm-hmm. This has to be implemented, and it hasn't been implemented yet. But the expectation, the very strong expectation, is that it's gonna be done. It's gonna be done this year, and they can start purchasing next year. I think in addition to that, we could see a very strong likelihood that U.S. utilities, which make up 20% of global demand for uranium, are going to want to get more domestic supplies of uranium in their portfolios, which currently there's none of. None. I mean, the U.S. consumes over 40 million pounds of uranium a year and has zero production of uranium. UEC is in a very great situation. I mean, and I'm not talking about our share price. That's a different story. I'm talking about our asset base, because we had this idea, we had this vision 15 years ago that the U.S. was going to need more domestic uranium. We never thought about COVID-19, but it didn't make sense that the U.S. was importing 15 years ago 90% of its uranium. Today it's 100%. And so we've had 15 years to build for this. Permitted projects, processing capability, people, know-how. But again, most important, the fact that we're a past producer gives us incredible credibility, both in the eyes of utilities that could buy from us, and with the government, and with the investors. We operated our uranium mines in South Texas for 4 years before shutting it in 2014. We have fully permitted projects. If you have a supply shock tomorrow and the uranium price is at $50 per pound, you have to ask yourself, is your company able to build, operate, and produce uranium? And Johan, most projects that are development stage today are not fully permitted. Fully permitted. If you have $100 per pound uranium tomorrow, you don't have permit tomorrow to build, operate, and produce uranium. What good is that $100 uranium? So we are.
It does not help.
We are really. This is what sets us apart: is permits, and having the know-how and the credibility that establishes us in very favorably with utilities, with the U.S. government, to be a supplier to them of low-cost uranium that we can mine using in-situ recovery. Our Reno Creek project in Wyoming is the largest ISR project that's fully permitted in the U.S. In South Texas, we have multiple fully permitted projects. And I'm quite frustrated by the share price, just to touch on that, Johan, because when you think about it, the uranium price was basically flat as we entered the sell-off in the month of March with the virus. Uranium price was flat. The oil price crashed due to all the dispute and issues with Russia and Saudi. And we became basically forced to ride on the oil trade as everything in the energy complex was sold off. So were uranium stocks. But the oil price, of course, crashed. the uranium price didn't crash. It was flat at 24. And now we have supply disruptions where the uranium price is approaching $30 per pound. If uranium price gets to $30 per pound, we have not seen that price in 3 or longer years. 3 years ago, 4 years ago, UEC was a company that was trading at over $2 per share. A year ago, UEC was a company that was trading at $1.60 per share. So today, at 60 cents or 65 cents, it's unbelievable because you look at that and you say, how did it get this low? And it's because of COVID-19 and the sell-off that we saw in March. But the fundamentals of the sector are, in fact, the best place they have been in 9 years. And the share price is at the lowest point it has been in 9 years. Now, mind you, it was a bit lower in March when the markets really fell. But of course, it's recovered from there. But compared to any other time in the last 9 years, this is, frankly, it's just frustrating, Johan. You know that.
It is.
But it's very frustrating. But what we've done as a company, we've implemented very strong and aggressive cuts. We've reduced our operating expenses, reduce and lower our payroll, our any cost center you can imagine. We've reduced. We announced this 2 weeks ago, right in the middle of all that storm that was going on. We came out and said we're going to focus on the safety of our people first and financial discipline. So we've made sure that we put our company in a position that can come out of this situation caused by the virus as strong as possible, and then stand to greatly benefit from the setup in the uranium market that we've waited so long for, and it's finally happening. It's happening for reasons no one ever predicted. But Johan, no one ever predicted the flooding of Cigar Lake in 2006, and no one predicted Fukushima happening in 2011. It always seems to be that when we get either a supply shock or a demand shock, it's some unforeseen event. And now we're in the very early stages of that in the uranium market.
That's right. And I saw also, I think Heiko Ehle from H.C. Wainwright brought yesterday a new analysis or new research coverage on you out. And I think the price target is now $3.50 for the stock. And I mean, today we are hovering around 68 to 70 cents. So it looks to me like that Heiko is quite confident here.
I mean, it's, there's an analyst that has covered the company for a long time, knows it very well. And frankly, when you look at even other analysts that have that cover the company, their target prices are multiples of where the current share price is. But Johan, again, forget about that for 1 second. In the last 3 years, this is a company that was able to complete financings and acquisitions to grow the business. And the financings and acquisitions that we did for shares in the last 3 years were all at average prices of $1.50 to $1.60 just in the last 3 years, where we did transactions, where we raised money. Again, that's 3 times higher than where the current share price is. That makes no sense. Yeah. And of course, I think with the analysts, they're looking at a high enough uranium price to get us back into production. And when you look at our company, the fact that we can get back into production with the uranium price in the mid-40s, that's very attractive because conventional mining, hard rock mining of uranium, requires $65 to $70 per pound. That's the incentive price. So it's very important to understand that there's 2 very important advantages. One is, do you have the permits? And second, how much is it going to cost to get to production? Because with conventional mining, open pit underground mining, any new project is going to require up to $1 billion to be built. With in-situ recovery, projects can be built for tens of millions. That is a very, very big difference. And
that's right.
On top of that, so I think you have to look at it very surgically. And when you look at it very surgically, you see not only is UEC way oversold and very much undervalued here, relative to where it has been, relative to where it's done deals, relative to where it's raised money, relative to what the analyst target prices are, but also relative to what it can do and what it can do in a stronger uranium market very quickly without significant capital requirements. We're not going to need to spend $1 billion or more to develop the fully permitted asset base that we have.
You have it. That's the point. You have it.
Most of the CapEx in Texas is already spent. It's our
exactly. And I think you were missing a third point, which is very important. You are able to quickly produce. And that's a major difference, because even if some companies are on the path for permitting, they need the funding, they need still some permitting. So from here, it's like 5 years plus.
That's it.
But you can do it whatever in like, I don't know, 6 months, 9 months, you can go in full throttle, right? And so that's a big advantage. That's fantastic. Exactly. Yeah, super. So it looks like we are set up for the perfect storm here, and it looks to me like that finally uranium really starts to break out. I checked the chart also this morning, and it looks like that we are just in the making of the 5-year chart, that we are breaking through the resistance line here. I think it's $29.50, $30. That's the real resistance line. So that's like $1 away, I would say. And then it can go quite fast. This is fantastic. Super. Anything more you want to add?
No, I think we covered a lot of ground. I think
so too.
I think we should reconnect soon to see how things have shaped up. There's a lot of moving parts, and I'll keep you posted on all the action that I'm seeing, and let's do this again soon. It's all of a sudden turned into a very exciting situation for uranium, despite all the challenging circumstances that the whole world is in. Obviously, first we got to all stay healthy and look after that first. And then second, we got to make some money as well, right?
Absolutely, loved it. And to buy cheap stocks is always a foundation to make money later on. And this is exactly what UEC offers. Amir, thank you very much. That was fantastic. Deep knowledge as always in the markets. Highly appreciated your time. And stay healthy. Happy Easter, of course. Hope you can still enjoy with your family. And wash your hands, as everybody's telling me. That's also important. And I hope that I see you soon.
Okay, likewise, Jochen. Thank you.
Thank you very much. Yeah, ladies and gentlemen, that was Amir Adnani, the President and CEO of Uranium Energy Corporation. And you heard it, uranium is on the rise. Finally, we are up like a good 20% within the last 10 days. And also UEC finally started to move from the market lows they had, but still way too cheap, the stock. So you really should have a look onto that. But what is even more important is the fundamentals are changing dramatically. And we are set up here for a perfect storm in the uranium market, because the buyers of the utilities, they did not act so far really. Then we have a new buyer probably, which is the US government. And we have supply crunch is now reality. We are losing over 50% of the monthly production now through COVID-19. And I think this brings probably some utilities into trouble. And from that perspective, I think the foundation is finally set for much higher uranium prices. I would suggest you check out UEC. Thanks for watching us, and bye-bye from Switzerland.